So obviously the Bitcoin gold debate has raged on for quite a while, and we now have some highlights, or I guess we have an inflection point, because reports are coming out of China about a $2.8 billion fake gold bar, and kind of how this financial corruption scheme has been allowed to unveil. So yesterday, the news broke. Well, this would have been actually 2 days ago now, because we didn't cover this yesterday. On a report coming from the Chinese media outlet Caixin, in which a loan deal between major Chinese financial institutions and a Wuhan-based gold firm known as Kingold Jewelry has apparently gone bust when it was discovered that the gold collateral used was in fact just gilded copper bars. So individuals took, the base metal of copper and just gilded it with a thin veneer of gold and passed it off as real gold. Now, according to Caixin, a number of the fake gold bars were just 100% copper. And the financial institutions who extended loans based on this collateral are now on the hook for major losses. And that's just reading here. It's about 16 billion yuan worth of loans were outstanding against using these bogus bars as collateral. A counterfeit metal was discovered in February when one of Kingold's lenders, Dongguan Trust, decided to liquidate its collateral to cover defaulted debts. So we have this financial institution that has extended loans for other business reasons, where it wants to liquidate its collateral, the loans that it opened up with its gold bars. So it wants to sell its gold bars to cover the debts that it was defaulting on. And they were not able to, because it was not real gold. Now, following this discovery, 3 other Kingold creditors also performed tests on the gold in their vaults and found that it too was fake. Now, this is just the latest twist in the global gold market drama, with speculation that has run rampant for years that many high-profile entities inside the gold industry are vulnerable to holding fake gold, typically made from lesser metal and gilded, as I said, with a thin veneer of gold. Now, there have been allegations in recent years even to go so far as to claim that central bank gold reserves of leading nations are most likely tainted with many fraudulent gold deposits. This scandal echoes back to another famous incident in 2016 when Chinese regulators found gold bars with black tungsten cores, which were used as collateral to back up about 19 billion yuan worth of loans, about 2.5 billion American dollars. And for Bitcoin supporters or proponents of Bitcoin, problems surrounding the authentication and the auditability of gold form a major argument against investing in the precious metal, or at least make a strong use case, or at least make a strong argument for investing in Bitcoin as opposed to gold, right? Fiascos like this are, of course, going to spark questions about how much gold being held as collateral around the world is actually genuine, and how practical gold really is as a reserve asset, given these uncertainties. Now, I would argue that this actually forms a bullish case for gold in the long run, if it is determined that a large quantity of the gold is actually fraudulent, and if that does not shake the idea that gold in and of itself is valuable, because it has been historically valuable. We have just overinflated the theoretical supply of it by faking it, because it's not real gold. Then that would actually cause a pretty massive run on things like the COMEX, and that would cause a pretty massive run on creditors out there to claw back their actual gold. Tests would be done, and this would, in my opinion, send the price of gold pretty high if it was discovered that there was a large amount of the circulating supply that wasn't real gold. That would massively increase the amount of demand for real gold. And that demand, last time I checked, makes the price go up. Now, in the last 4 years, at least $50 million worth of fake gold, allegedly from Swiss refineries, has been found in the vaults of JP Chase. And JP Chase is one of the largest banks at the center of the bullion market. We've covered this quite a bit, where they are the largest short seller on the COMEX, so one of the largest holders of silver as well. Fraudulent gold is a major contributor in undermining the trust and store value proposition that gold can bring with it. And this does help shine a bit of a spotlight on alternative investment options available, for example, Bitcoin. But let's get back to the current debacle. A further investigation has ended up revealing a great deal about the Wuhan-based Kingold Jewelry, who humbly refer to themselves as a company with a golden future. Now, they are listed on the NASDAQ as well as being the biggest gold corporation listed on the New York Stock Exchange under the name of Kingold Jewelry Incorporated, common stock, KGJI. Kingold has been producing and trading gold since 2002, but as of today, it's now permanently associated with the biggest gold counterfeiting scandal in recent history. Now, it's been speculated quite a bit that China is a fairly prolific counterfeiter of various industrial metals. And they use these counterfeit industrial metals to secure bank loans. And basically, this counterfeit collateral is known as ghost collateral. They do it so much that there's a term for it. Now, Kingold is one such company that we know of, which has entered into a series of extensive loan schemes with over a dozen Chinese banks and trust companies, in which their gold holdings serve as collateral. To make matters worse, much of this collateral in these situations is rehypothecated, meaning often several banks actually have a claim to the same fake assets. Rehypothecated is where you are holding something as collateral, you've already given a loan for that collateral, and you decide to re-loan it out to somebody else. Obviously, this is a hustle. Well, as long as they pay me back before the other person comes calling, I'll be just fine. But what happens when both of them come calling? And this is what can happen. This is how things go wrong very, very quickly. This is why market meltdowns happen very, very quickly when there are runs on banks. Everything's fine when people are calm and they don't need their money. They don't need their precious assets in their hand right now. But wait until everybody wants to hold their means at once. And there's just not enough to go around. It doesn't exist. Now, in this case, more than 83 tons of gold, that's about 22% of China's annual gold production output, has been destroyed, or really, it never existed at all to begin with because they counterfeited it. Now, the fallout from the scandal could even go so far as threatening the Chinese economy and trust in their inventory and bookkeeping across their entire financial system. As Chinese media reports that there's a whole chain of dependencies across these banks, and creditors may be in jeopardy. Again, as I said, the center cannot hold, and when things fail, they fail very, very quickly. Now, of course, Peter Schiff could not hold himself back from commenting on this, said more about the mentality of Bitcoin investors than gold's integrity, right? He says, quote, "This just shows you how delusional Bitcoin bugs are." Now, while cryptocurrency gets slammed by gold bugs like Schiff, Bitcoin does have a major advantage when it comes to proving its authenticity, right? It's a very straightforward process that costs nothing. It's executed automatically through Bitcoin's consensus algorithm. Now, Parallax Digital CEO Robert Breedlove, that's a name. Oh, man. Hinted that the choice would be ultimately obvious for the market as to what is the superior store of value in the digital age. Quote, "Bitcoin is more divisible, durable, portable, recognizable, which encompasses verifiability, and scarce than gold. Bitcoin is also cheaper to safeguard and less vulnerable to theft." I wonder which one the free market will select. Now, we have to realize that currently the world is awash in fiat money, which is not backed by any underlying asset. Instead, trust in government-issued currency is backed by the strength of its economy and institutions, or its productivity and future prospects. In other words, trust in fiat money is trust in a centralized entity and issuer, and this centralized trust is the cornerstone of our current financial system. It's a similar matter when it comes to gold. A great deal of trust is placed in all of the IOUs for gold when paper contracts are traded. Institutional holdings of gold have audits and disclose their reserves, but this too requires trust in the integrity of all parties involved to remain confident in the supply. Even when gold trades are settled physically and the gold is firmly in your hands, are you prepared to drill into the bullion to ensure its integrity? Are you confident the serialized bar that you hold, stamped by a Swiss or Canadian refiner, isn't a forgery that's come from China? Now, when national or central banks disclose their gold holdings, how confident can we be in the honesty of their inventory and record keeping? Auditing gold reserves on an international level is a massive undertaking. One can never be as sure in the overall supply of something like gold or anything physical, as contrasted against the way a distributed ledger keeps everyone honest and able to conduct their own audit quickly and easily of any part of the supply, of any address. Indeed, thanks to Bitcoin and cryptocurrency, we have a new era of trustlessness. Individuals do not have to rely on institutions or central banks or corrupt auditors. Instead, we can place our confidence in the absence of those centralized authorities, and that self-administered control is now possible This uplifts security and freedom. Now, Bitcoin offers traceability and accountability that other assets just cannot meet. But it still maintains a degree of privacy, along with being free of control or seizure by a third party. And it's these aspects of cryptocurrency that really make it stand out from traditional stores of value like cash deposits or even gold. And a distributed ledger that you can personally audit offers a level of transparency and trust that is just not possible with traditional bookkeeping. Now, what do you guys think? Do you see the big picture value proposition of Bitcoin and distributed ledger technology? Do you see how even when it comes to hard assets like precious metals, there are pitfalls related to trusting third parties? And do you recognize how Bitcoin is unique in this regard? And for the ultimate doomsday scenario, hard assets like gold, guns, ammo, and seeds may still be the way to go. But in the modern digital age, with an international economy built on trade and cooperation, Bitcoin may be the ultimate tool for keeping everyone honest and our accounting transparent. Let me know what you guys think in the comments section down below.